So we have started an earnings season, and one of the many things that we've noticed is that analysts are actually lowering their expectations, pricing in a recession or expecting the higher interest rates to have an impact on company growth. And this is seen over here with Google. If you look at their ER back in July of 2022, analysts expected 1.29 in EPS and 69.80 in revenue. And as of recently, they expected 1.07 in EPS and 68.81 billion in revenue. And so as you can see, they lowered their expectations. And another thing to notice is what they actually reported. Back in July, they reported 1.21 EPS, and now they reported a 1.17. And as for the revenue, although it has increased from 69.68 billion to 69.79 billion, something to note is how the reported revenue is still lower than the expected revenue back in July of last year. And even so, the stock price has gone from $105 back in July to $112 currently. And something similar could be seen with Apple. If you look at the quarterly financials from December, they reported revenue of 117.5 billion and a net income of 30 billion. And recently they reported 94.84 billion in revenue with a net income of 24.16 billion. So their report has shown a decrease in revenue and net income, with net income being down 19.5% and the stock being up 17% since then. And something that we've noticed is AI being the buzzword. During many of their earnings report, AI is being mentioned numerous amount of times for both big tech and smaller cap companies. And this is leading to some pumps within those stocks as they report their earnings, as people view AI as something very bullish now. And as you can see here from Benzinga and Stock Market News, NVIDIA reported saying AI 75 times during their ER, Alphabet 62 times, Meta 33 times, and Microsoft 31 times. And another thing to note is us having a sticky core CPI. And so as you can see here on the graph, we did peak in June of 2022 at 9.1%, and we are now down to 4.9% in April of 2023. But one thing to note is how core inflation, the core CPI, has not gone down too much, and it's definitely far from the Federal Reserve's 2% goal, and it's still at 5.5%. And core CPI is an important one to note. Even though it excludes the food and energy sector, it does include many things essential for households and people living their everyday lives. And all of this has led to a crypto meme rally, as crypto, meme stocks, meme coins have been rallying, starting with Pepe being up over 10x at its peak. And as you can see here, clearly it's gone down, but many other cryptocurrencies, meme stocks have been replacing it. As the market has been chopping around lately for the past few months, people are looking for different assets where they could invest and make more money. And so they've resorted to crypto and meme stocks in order to get higher returns.